This month's podcasts are sponsored by Aubergine Legal. Do you sometimes worry that your business isn't meeting all its legal compliance requirements and wonder if you're ticking all the legal boxes? Are you losing sleep worrying about a piece of legislation that you may or may not be complying with? Perhaps you need some help with your client contracts or your data protection compliance. Or maybe you're worried that your website doesn't have the right documents or legal notices in the right place. Perhaps you have a brand that you want to protect with a trademark. How about if you could outsource it all and eliminate all of your worries? If so, then get in touch with Aubergine Legal, a friendly commercial legal consultancy offering practical and clear commercial legal advice without the overwhelming legal jargon, taking the worry away and helping you to protect your business and minimise your risks. Aubergine offers a free 30-minute consultation if you have any questions or want to find out if they can help, and you can access this link and book your free 30-minute call via the link in the show notes. So, hi, Wendy and Laughton. Thank you so much for being here.
Thank you, Vicky, for having us.
Oh, you're welcome. So, can we start with you, please give an introduction to yourselves and your business?
I'm Wendy, and I founded the business about 4 years ago. And this is Laughton.
Yeah, I'm Laughton. I'm Wendy's business partner, husband, and we work closely together. I'm a director in the business, and we support each other with all of our account work.
Brilliant, thank you. And I should mention as well that you're from Tonbridge Accountants and you've been on the podcast before, so thank you for coming on again. And I have lots of questions for you today about setting up as a company, some of which have come from my Facebook group members as well, so they're not all, I can't take credit for all of these. So we're going to start off with at the beginning, I guess, which is, can you explain to us what the difference is between being a sole trader, which many of us may be, and setting up as a limited company?
I guess the main difference is in the name limited company. So it's the limited part and it's the limited liability, which is the big difference between the two. And what that really means as a sole trader, there's no legal difference between yourself and the business. You are the business. A limited company is a completely separate entity. It exists in its own right, so it can borrow money, it can sign contracts. It's separate to the owners of the business, and that's what most people think about when they're considering setting up a company. Would I like there to be separation between me as an individual and my business?
Yeah, that makes a lot of sense. Thank you. So I guess, yeah, so you're the company and you are two separate things. So financially, your house isn't a risk if you have if you owe money in your business. Is that the right way of thinking of it? You're two separate financial entities.
Yeah, I guess in an extreme scenario, that's exactly right. Your liability within the business is limited to your investment in that. Whereas as a sole trader, I don't know. Let's say you're undertaking some risky trade, and there's a high chance of something going wrong, somebody taking legal action against you. As a sole trader, if they take you to court and you're liable, they can take your assets, they could take your house, they could take your possessions. So as a limited company, it would be the company being taken to court, the company would be sued and would be liable, and it's the company's assets that would be potentially taken, not yours personally. So that's where the separation is.
Yeah, we always try and explain to our clients the simplest way is you're almost like creating, this ring fencing yourself and your personal assets with a limited company versus a sole trader where you are the business, you are everything in there.
Thank you. And I know that was an extreme example that we gave there, but I think hopefully it helps people to see the main difference. So at what point might you consider setting up as a limited company? If you're listening now and you've been operating as a sole trader, when is the time to think about forming a company?
That's an interesting question. It's a lot of people we speak to just assume there's like a numerical point and it has to be based on your income or your earnings. Up to this point, sole trader's fine. After that point, everyone switches to a limited company.
Yeah, we get that a lot, isn't it? Like, it's my mate said 50K, so and so said this and that, but there's a lot more considerations that you have to put in, not just one round number.
Yeah, so I think the answer there is really that it's not black and white. There isn't just an answer. There isn't a number at this stage. It's best to be this. At that stage, it's best to change. It really depends on your business, on you as an individual, on your circumstances. You know, there are some very, very large businesses that operate in, you know, chains of shops that are operating in a dozen different towns that are still sole traders because that's how they've chosen to carry on. They could have, you know, turnover in millions and they're still sole traders because it works for them. You know, you can have very, very small limited companies that have decided to incorporate maybe straight away. You know, they've started off as a limited company because it works for them. So it's not necessarily that one is best or the other is best. It really has to be taken into consideration of the circumstances of your business.
But I think also worth noting is the cost of running a limited company, with the benefits that it or flexibility it provides you. You have to. We always mention to our clients that you will need to allow more in terms of the fees to run a limited company. There's just more reporting involved in there, and to maintain the books and records. So it is a flexible, and it gives you that kind of benefit, ring fencing and all that, but still will come at a cost. And if your business, for example, is not generating sufficient profits or income to enable you to have the option, then that is no longer an option, despite the, yeah.
That makes sense. But it sounds like the answer is going to be different for everyone. And theoretically, there's nothing to stop someone setting up as a limited company from day one. And there's also nothing to stop someone operating as a sole trader for the foreseeable future.
We also assess in the discovery call in terms of like whether they're partners or husband, wives, if there's anything as well to, consider as from an overall perspective, isn't it?
Yeah, but what I would add to that is we often talk to people who've maybe set up in one of those forms without giving it proper consideration and realize later on a different type would be better for them. We're not saying you can't switch between them. It's absolutely possible to change from one to the other and vice versa, but there's complexities around that. If you start as a sole trader and you want to, after a year you decide to incorporate as a limited company, there's a lot of complexities around that. It's going to take you a lot of admin, a lot of tax work, probably cost you quite a lot of money when thinking about it up front. And just, considering some of these points ahead of time might just help you get what's right for you from the very beginning. So I think it's important to think through what is going to be right for you.
Yeah, and also to consider in terms of, I always do the extra bit where I drill to the business owner in the next 3 years, 5 years, where is the business going? What sort of income are you going to be generating? So it just gives you to, in the next 3 to 5 years, the solution is still going to be the right fit, rather than you're going to outgrow that very quickly. Then we'll go for the, for the best option.
Perfect. Thank you. And I'm really hoping that this episode will be a really good starting point for someone who's thinking about which option works better for them, because it sounds like it's very individual and there won't be one answer for everyone. So let's just cover, if that's okay, to give people as much information as we can. Are there any advantages or benefits of setting up as a limited company that we haven't touched on already?
We haven't mentioned in detail is sometimes the reputation or the perceived reputation. I think in some industries, and again, depends really on the trade, but we've spoken to people where, as a sole trader, they weren't necessarily winning certain contracts or being taken as seriously as some of their competitors, but when they became a limited company, it kind of gave them a credibility that they didn't otherwise have. It's not always the case, but in some industries that seems to be fairly common. So that could be.
Yeah, that's really interesting.
And I think we'll come on in a little while in a bit more detail around some of the record keeping topics and some of the taxation topics, which might help to expand on that a little bit.
Yeah, I think so. It's such a big area, which is why I'm trying to break this down into such small
Yeah.
questions, because there's just so much to consider. How about any disadvantages when we're talking about setting up as a limited company in particular? Are there anything we haven't covered that people, maybe not even a disadvantage, but just something for people to be aware of?
I think these days it's quite easy to set up a limited company, isn't it? And what that means is often people do it without thoroughly researching it or thoroughly understanding what they're getting themselves into.
Yeah.
Not to frighten people, but as a limited company director, you've got a whole load of legal obligations you have to comply with. There's a whole load of reporting requirements, which we'll come on to in a little while.
Yeah, you'd be liable to quite a lot of quite a lot of things. And I speak to a lot of business owners who are directors of limited companies, and most of them don't know the responsibilities of what they actually need to cover. So we have that bit of spend that time to educate business owners a bit more in terms of what they need to do. And it's so easy to register a company. I registered mine in a car journey, so but I know a bit more what it takes and what our responsibilities are.
Yeah, I wouldn't necessarily say it's a disadvantage. I mean, if you understand it and you've got support with that, it's absolutely manageable. It's all fine, and it can become quite routine for you. But I think if you go into it not understanding what those responsibilities are and you're not aware of them, some things can catch you out because there is a lot to deal with. And
So
I think it's important to be aware of what you're getting yourself into.
I see there's this two kind of there's two type of people. The first one would be I'll set up a company and then they come and speak to you and like, what do I need to do? To set up this from day one, I need the whole accounting tag and everything. What can you tell me? What do I need to have before I start my business or issue my first invoice? And you get the other extreme one where my year end is coming up. I've got 2 months left to file. What do I do? It's basically going back all the way to try and tell them like you need to build your records up, all the bookkeeping, invoices, banks, and everything. So it's very it just shows you the level of almost that gap between once a person sign up for a limited company director, they can go either ways. Either they very, very well prepared from day one, or 2 months or a month before deadline, it's like, what do I do?
Right. I can see that. And hopefully this episode will help people to be very prepared if they decide they're going to do this. So you mentioned that setting up a company is actually relatively easy. So how would you go about doing that?
So a few options with that. The simplest one, you go onto the gov.uk website. You sort of follow the application process. It will take you through each step. It normally takes around 24 hours to get it registered, and it will charge you £12 for the fee.
You have to check whether your name is available. If there's anything similar that you wish for to register as, then it might not be available and you might have to change it. It's always worth checking and having a couple of options just in case.
Yeah, I think it's definitely worth it. That sets out all the steps you need to consider. So, I think that would be a good first port of call for people to look at to understand what things they need to consider. Giving one example, one of the questions it's going to ask you is, what would you like your registered office to be? Some people panic and then think, oh, I'll just put my home address in there. They don't always realise that once that's been entered, it's then publicly available information. It's on the Companies House website. People looking up the business will be able to see their personal details. For some people, that's absolutely fine. Other people prefer not to have that. So they might think about, okay, well, I want to have a registered office address provider. When you get into that kind of situation, then there's companies that they can form the company for you. They can give you a registered office address. They can give you a direct service address. They can even set you up a bank account, do your VAT registration for you, all as a package. And often they're really, really big firms. They do thousands of these every week, and they have the economies of scale for it to be really cost effective, way of doing it. So it's definitely worth looking at those as well. another option, I would say, maybe for the more complex cases, it's worth talking to an accountant before you've even started the business. Because if you've got a particular type of entity that you want to set up, if you need, for example, if you need different classes of shares, or you need non-standard articles of association, things like that, you might have particular needs which can't be handled by one of those basic routes. So it's worth speaking to someone who's covered that before to talk about what the options are.
Yeah, that makes a lot of sense. And I'm assuming that you're happy to have calls with people who haven't registered a company yet, but are considering it, and talk people through this in more detail.
Yeah.
Absolutely.
Yeah, and I think the other bit as well is they will ask you about the share capital, which people tend to get a bit stuck as well when you do the DIY thing. Just put one, and then in future, if you're going to have a business partner in, then what we've done or helped as well is to change the number of shares or change share classes and stuff. It's all doable, but like we always advocate is to be prepared. Have a bit of so it's not always a solution of what's going to fit you today. What's good is having that slight projection of 3 years, for example, a good start to see what's going to happen next, and then we can kind of make it cover it so that whatever package that you're using is going to fit your needs as far as we can project.
That makes sense. I hadn't even thought about the shares aspect. So is that, in really simple terms, is that looking at how much of the business you own? So if you're in a partnership, how much stake you each have? I know it's probably a really big topic, but I'm just trying to make it really simple.
So for example, using your two business partners working together, sometimes they'll set it up and they'll say, okay, we'll have one share each, £1 each. And then later on, they don't want the 50-50 split. They want to split it some other ratio. If you've only got two shares, you can only have either 100% or 50% or zero. So if you want to split it another way, you've got to start issuing more shares, which is all doable, but it's easier just to get it right to start with. If you think actually we might want to bring in other shareholders, or we might want to have different ownership ratios, if you've got all that planned out, you can set it up in such a way that it facilitates that later on. You don't have all the additional admin down the line.
Yeah, you can set up as 100 £1 share. I've actually seen people accidentally set up as 1,000, and then obviously you have to pay that 1,000 as your capital thing. But sometimes, when you do it on the form and things, that kind of accidental extra zero and stuff, they all will mean something eventually.
I would strongly suggest that the first time you're thinking about an answer to these questions shouldn't be when you're going through the website answering it live. You should have gone through them beforehand, done a little bit of research, maybe spoken to a professional if you need some more guidance. And when you go to register it, know what you're doing and why you're doing it, so that you get it all right the first time.
That makes sense, because these are really big decisions, and it sounds like, yes, everything can be changed down the line.
But it costs money to get changed, and sometimes people get a bit, not thrilled about having to pay to fix things or to upgrade and things. And it can all be done right on the first time, to the best knowledge that you have. Not a problem at all.
Okay, that's helpful. Thank you. So let's talk about the accounting side now. So when it comes to accounts, and I wonder if we need to talk about sole trader and limited companies separately. I'd love to talk about what you need to know and what you need to do to ensure that you're always compliant, because I think, should we talk about for a sole trader first of all, if that's okay, and then we'll move to talk about a limited company, just so people have an idea of what's expected and what's required. So if you're a sole trader, what are your what compliance things are there? What do you have to be sure to do?
So, but in a way, there's a lot of similarities. At the very basic level, keeping proper business records, whether you're a sole trader or a limited company, is the fundamental basis. It's your starting point. So having proper books and records, having a record of all the income, all the expenditure, all the assets, all the liabilities, any contracts you've entered into, that would be the same for both. So it would absolutely apply to a sole trader.
Yeah, and that's the most important one. And the like people neglect that. That's your top. The top, like whatever you call it, the most neglected area and stuff. You'd be surprised, but yeah, people neglect that. But that information is going to tell, how much you've invoiced or how much your turnover is. They all linked to the amount of tax that you will be paying. So if you haven't kept any tab of it, chances are you haven't put any aside of the money that you owe to HMRC for the tax.
Right. So however you're operating your company,
or social or business, yeah,
or business. So however you operate, whether it's a company or whether it's as a sole trader. So I guess the key thing here is keep records of everything related to your money.
Yeah, the more the better. You can't have too much detail. I think there's this common misunderstanding when it comes to sole traders that, oh, it's a sole trader, therefore it's very, very simple, and I've only got to do something annually. Quite often people will do nothing for a whole year, and they'll come to putting their accounts together or putting their numbers together, and it'll be scrapping around to find all the information, having not done it month by month or week by week. It's much easier if you do that as you go. I mean, it is possible to reconstruct it all later on, but you'll have a much better view of what's happened if you do it weekly or monthly, or at minimum quarterly. So
Laughton's very good at reconstructing his done lots.
But I imagine it's very hard to go back a year, for example, and
pull out from the bank account. But you get that whole sole trader where they use their personal account. You see a lot of coffee takeaways and everything.
I suppose, that must be hard in that situation actually, to work out what's a business expense and what's a personal expense.
Yeah, it can be complicated, especially if they're not well separated. But I think what a lot of people don't realise as a sole trader, the advertisements that are sort of promoting HMRC and some of the software that tries to facilitate people meeting HMRC requirements, they try to make it as simple and as digestible for people as they can. What's often overlooked is that as a sole trader, you still need to prepare a set of accounts not as detailed as a limited company set of accounts, but you are still expected to prepare a set of accounts that allow you to determine the business profit for that year. That's then used as a starting point for your tax work, which comes later. So in a way, they're both saying that you have to prepare a set of accounts for the business. They're just prepared to a different standard. And I think people overlook that because there is, for example, with a sole trader, you have cash accounting, which is a relatively new thing. For the smaller businesses where they don't have to prepare a traditional set of accounts, they can just record the income and expenses of the business on a cash basis. It's simplified. It's designed to help smaller businesses. So a set of accounts prepared on that basis would look a lot different.
Yeah, and we prepare it from an accruals point of view. A lot of people, when you DIY, you don't really think how it's going to impact your tax, because when you do like the accruals, the matching to match your revenue to the period and all that, it could be a case of your tax figure could potentially change. Depends on how you account for them.
Yeah, so I think it's important to understand whichever business format you go for, to understand what your reporting requirements are. The fact you are going to have to prepare accounts, the fact that the basis you choose can impact what's reported and when, and therefore lead through to the timing of when taxes are paid.
That's why when you prepare your tax returns for your sole trader clients, they can vary by quite a bit compared to if they DIY, right? Like they might end up with 20k tax bill versus much lesser, or depending on what you account for the tax adjustments, what's allowable, what's not.
Yeah, but if a sole trader is preparing a full set of accounts, that they're supposed to follow generally accepted accounting principles. It's a set of rules that an accountant would understand the history of those. If people haven't had experience of that, they might not understand how to capture certain transactions, how they should be recorded, or they might not record them at all. Things like When people take loans for business, they don't always capture those, so they don't realise that maybe some of the loan interest they paid could be a deductible expense for them. They've not taken credit for. So they've maybe paid tax on profits that are higher than they should, because they haven't thought about including these things.
Yeah, you tend to get those where they just pick up, like, say, 5 most common expenses you can deduct for tax, and just put it when they do the tax return. You know, a bit of like maybe asking friends or like groups and things like, oh, what do I do? But they don't assess it based on, is that the most favorable method for you and your business? It's just more of like, this is the quick tip. Is that you got to look at it more in depth. I think that's where we, that's where we come in.
I think, just coming back to your original question, in terms of for the sole trader, what's required, they have to prepare the accounts or the numbers as the starting point for the tax, but they don't actually have to file those accounts. They file the tax return. Tax return is the main item that gets reported. So all of the figures in there have to be somehow substantiated, but the only thing that's filed is the tax return.
That makes sense. But I guess you need to have all of those figures that sit behind it, because presumably HMRC could come to you and say, we want to see all of your financial details. We want to see the figures.
Exactly. They could come and say, where does that number in that box come from? And the ideal answer should be, it ties into this set of accounts that's been prepared over here in accordance with accounting standards, which then in turn ties through to this set of underlying books and records. It's all nicely reconciled, tied through to bank statements, tied through to other records, and it all matches together and it all maps through.
Yeah, basically you need to be able to substantiate, for example, your mileage claim. It should be it should be a little calculations of where you've traveled for business, how many miles you've logged on and stuff. But I still see people chatting and say, I've just put a wrong number in, and yeah, can't really do that.
That makes sense. So I guess it's good just for peace of mind to know that any figures you're putting in, you have the data to back up where that figure came from, and it's compliant, obviously.
That doesn't necessarily mean having a really, really complex way to record all of this. It can be captured in quite a simple way. If you're not using software, you can capture it in a spreadsheet or even a set of handwritten books. I think the main thing is having something written down regularly, so you've got that backup.
You just put a little notebook in your car and log it on.
Yeah. So it doesn't really matter what system you're using, but you need some kind of a system, I guess, is the takeaway. So it sounds like actually when it comes to compliance, there aren't huge differences between being a sole trader and limited company, I think, in that you both have to do reporting. So should we talk about limited companies in more detail, and what kind of annual paperwork or accounting do you have to submit? Is it a lot more than if you're a sole trader?
In terms of what's actually submitted, yes, it is going to be a lot more. So I think we've talked about the similarities, so that they're both going to have a set of books and records. They're both going to have a record of all the key financial transactions. They're both going to have a set of accounts. The key difference between the accounts is the limited company accounts. Most of the time, they're going to be more complex in that they have to follow a set of company law, so a set of company legal rules. They have to follow accounting standards, which are published and defined. And that often can include not just the numbers, but all of the disclosure requirements that go around those numbers. So all of the accounting policies, details of how certain transactions have been handled, certain disclosures that are required, transactions with related parties, that kind of thing. There's all these rules around what has to be included in there. They have to be presented in a certain format, measured in a certain way. So that a key part of a limited company set of accounts will be everything that comes after the numbers, all the notes and everything else is often where all the detail lies. And they get filed. So with a sole trader, they don't have to file their accounts with Companies House. A limited company has to actually file those accounts with Companies House every year by a certain date. And if it's not done, it's a breach of the rules, and there's going to be penalties issued. So and those penalties, they're increasing as well over time. They're really cracking down on making sure people do this well. So it's going to be more severe for non-compliance in future. In addition to the accounts that are filed, a company also has to file a tax return. So in the same way a sole trader would file a tax return, a company files its own tax return, which is linked directly to its accounts. One other thing a company has to do that a sole trader wouldn't would be the annual confirmation statement. That's another company's house filing requirement, and it includes things like details of the directors, the registered office, shareholding, people with significant control in the business. That all has to be logged with Companies House. It has to be kept up to date throughout the year, and then on an annual basis, the directors have to submit the statement to basically confirm that the details held by Companies House are accurate.
It sounds like there's a lot more to file as a limited company. Can you do this yourself, or do you really need an accountant to do all of this for you? Sorry for the very blunt question, but I think it's a question that I've been asked, so I'm putting it to you.
It's a really good question. I think accounting, the way I look at it, it's the same as anything else. I mean, if you're talking about electricals, could you rewire your own house? Well, of course you could. Should you? Possibly not, if you don't know what you're doing. And it's the same with accounts. You could do all of this yourself. If you know what you're doing and you're confident in your ability to get it right, but then by all means do it yourself. But if the rules are really, really complex. If you don't, if you've had no training in accounts, you don't understand the rules. It's often far better to have a professional do it for you, purely because they'll do it quickly, they'll do it right, they'll make sure that you've thought of everything and that things haven't been left out, and it just generally makes your life easier. If you're running a business, you've probably got 100 things you could do every day. Are you going to spend all of your time worrying about your bookkeeping, your accounting, and getting your Companies House filing done when you've got customers to deal with, you've got new projects that you're trying to get off the ground, you've got all of that other stuff that needs your time?
The accounts have to be tagged as well. So the IXBRL tagging. So you will get caught with our software because it needs to link up between Companies House, HMRC.
That's a good point, Wendy. Like the practical side of it as well. It's like, you could put the numbers together, but in terms of actually putting that in the format that's needed to be filed, filing it at the right place at the right time in the right format, so that it doesn't get rejected or fail to adhere to all the rules and regulations. So many things could go wrong. It is often better just to have a professional dealing with that.
Yeah. And I'm also thinking there must be things like working with an accountant means you can be very clear on what you can claim for, what you can't, and just making sure that you're 100% within the rules of what's allowed. Because I'm sure you must have come across clients who, they're not sure on, okay, can I claim for this? Can I claim for that? And I think the benefit for me for working with you guys is that I can ask the question and know that the answer I get is correct, and I'm not going to get into trouble, basically, because I think that is something that people genuinely worry about, is that you want to be complying, and you want to know that 100% certainty that what I'm doing is correct. That's for me anyway, and I'm sure most others feel similar.
And also I think the biggest take from this is you want to be able to sleep at night, right?
Yeah.
So when you try that DIY route, you're not going to fulfill that. And it's not just one night, it could be for a very long time. And if the numbers aren't correct, for example, then you would be, you might not make the best decision for your business. How to grow it, and I think we'll cover later in terms of things like how to pay yourself or extract profit from the business and things. It's the whole it's just that that key starting point that is just gonna, like, basically for me, I look at it like it's just gone downhill.
I mean, coming back to the point on things like allowable expenses, right? You're going to have a couple of situations there. You're going to have really common ones where there's, decades worth of tax law, case law around it, and there's probably a very clear answer, and maybe someone just doesn't know, they've never come across it. An accountant should be able to give you that straight away.
Most accountants.
Yeah, but the way technology is advancing, the way things are moving, there's often really new stuff where someone might say, can I claim this? And the answer might be, do you know what? That's a brilliant question. I have no idea. There's no tax law on it. It's never been to court. No one's ever argued it with HMRC. It's completely brand new. Here's what we think based on, what's gone, similar things that have gone on in the past. But let's help you get an answer on that. Maybe we can talk to HMRC and get some sort of agreement on from them in advance,
and we also justify amongst each other, like, how would we argue it? You've got two accountants here, so it's quite handy. But and things are getting, like, you get new things coming in, and I think the recent years, like, the new things that we are seeing a lot more is on like content creators or influencers. So the common deductible or allowable is different, and I think some of even the tax cases are not.
There hasn't been any yet.
Yeah,
it's so new that in HMRC, if they think, these tax legal cases can take years to go through court systems, tribunals, appeals, and all of that. So to get a straight answer on new stuff, you're often getting it several years after you need it. But in those cases, talking to someone who kind of knows how the system works, who can give you sort of what the general rules are and help you to sort of apply that to your situation and to justify it. Because at the end of the day, if you're entering into it in the right spirit, you're doing the right thing, you can justify that, then you've probably got a good case. So we help people navigate their way through those newer things as well.
You need to be prepared that if you get, we are always, if you get that email or the text from HMRC, can you justify this? Or have you done this? We can. You need to be able to. I think that's always the end game. Like, if you get asked, what are we going to tell them?
Yeah, as you said before, Wendy, it's about being able to sleep at night, isn't it? And having that peace of mind that you are doing the right thing with the right intentions. And I think on a similar kind of subject we were talking about, how about the tax benefits for sole trader and for a limited company? Are there any? Yeah, are there any benefits, or is there one type of business that would be better?
So that depends on a lot of different things. So maybe what we can do is sort of cover how each of them is taxed, and a lot of this is going to come into the role of the person running the business and whether they're an employee, what their status is. So
yeah, I appreciate this is a big question. So should we start with thinking about a sole trader and how that works first?
Yeah. Maybe before we jump into that, I can start with a very basic rule of thumb. Right? If you're going to take all of the profits out of the business and you don't want to retain anything, you just want to take everything you earn. For a lot of small businesses, there's not going to be, in reality, when you add it all up, there's not much difference between the two. For a business earning 60,000-70,000 pounds a year, that difference could be a few £100s. And often the additional admin maybe isn't worth the tax rate. You sort of have to balance it all out. It is going down this path going to be worth it. So, but that's if you're taking everything out. I mean, the one great thing about limited companies is, but it comes back to what we were talking about at the start, because it's a separate entity and because it's completely its own thing. Any money earned by the limited company, it gets subject to corporation tax, but it stays within the company unless it's drawn down by the shareholders. So if you're going to leave the money in the business, it is massively tax advantageous to have a limited company. So at which it leads me straight on to answering your original question, sole trader and how they tax. Sole trader, you're taxed on everything you earn. It doesn't matter what cash you take out of the business. You work out your profits for the year, whatever that profit is, you get taxed on that profit. You can't decide to keep some of it in the business or to not take all of it. It's 100% you're taxed on everything. So it gives you less flexibility in terms of, if you have a really, really good year, you've made great profits, you're just automatically going to be taxed on all of that. It's completely different within a limited company because those earnings would be earned within the company. The company would pay corporation tax, which can be lower. It's just been increased recently, but traditionally it's been 19% for the last few years, lower than the rate you pay on sole trade would pay on earnings. But if you're not paying that out as dividends, it stays within the company. So if you're a growing business, if you're investing in the future of the business, you're buying plant, equipment, machinery, websites, other things, keeping that in the business, using it to invest, it's going to save you a lot of tax having the limited company structure. So maybe we should come on to, how do you get the money out of the limited company then? If it's separate and if the company earns the money, it's paid the corporation tax on it, you've then got a pot of retained earnings there. How do you access that? Well, as a shareholder, you can pay yourself a dividend, and that's basically a distribution of earnings coming out of this after-tax money. To you as a shareholder, that is then taxable income on you as an individual, but the tax rates on dividends tend to be a lot lower. So the basic rate is 8.75%.
And what about a salary? So if you have a limited company, are you an employee of that company? And should you pay yourself a salary? And if so, how is that taxed? Sorry, I know that's a few questions in one.
No, that's fine. You're not automatically an employee. I think if you have a limited company and you're the director, the directorship, you're considered to be an office holder. So you're not necessarily an employee. Again, as the office holder, you perform your responsibilities as a director. So if you're getting paid for that, then that would be treated as if you're getting a salary or a wage. If you're just a one-man band and you're doing everything, doing all the work for the company, then you probably are going to be considered an employee as well. You're basically the main worker. And a lot of this comes down to employment law and whether you've got a contract. But I won't go into all of that now. But basically, you're not automatically an employee, but you very well could be. But yeah, any money that you take as a wage or as earnings, that's going to go through payroll. That's going to be subject to tax and national insurance. That's a bit of a complex landscape in that there's certain thresholds for tax, there's threshold for national insurance, there's different rates that apply at different levels, and it's almost like a big puzzle where you have to work out what's best for you and your circumstances. All of those salary payments or wage payments are going to be deductible for the company against its corporation tax. So if you had a load of profits, you pays them all out as salary, maybe the company then doesn't have any profit because you've paid it all out. So the company wouldn't pay any corporation tax, but then as an individual, you have a huge salary, you're going to be paying personal tax. That's probably not going to be the most efficient. So what people tend to do, limited company owner, managers, directors, they tend to pay a smaller salary supplemented by dividends, because you get the best of both worlds. Then you get the tax deductibility of the salary for the company, which reduces the corporation tax, but you also then you're getting that income. You're using your tax thresholds, your allowances in the best way. You're using the dividends in the best way to minimise the tax that's paid overall. So that can be configured in a way that suits people. Because again, it really comes down to your circumstances and what salary you might need in certain situations.
Yeah, and we do a lot for our clients in terms of configuring what is the most tax efficient way to pay themselves out the business. And you always have to, take into account for what is their personal circumstances. Like some owners, they have a set amount that they have to pay themselves in terms of to pay the bills and all that. So the dividend part, the dividend way might not be, might not cover that, or and there are rules around issuing dividends as well. So I think it really depends on what they actually need. And you have some people who say, I know them, what's effective would be, say, paying yourself like £1,000 a month. But you have people who say, I need £2,500 or 3,000. It really depends, because you then get some people who might need a bit more in terms of if they have a mortgage or anything. So it's all very, that's why you have
to be fitted to
yeah,
the circumstances. So there's no
and you don't want people who come to you and just say, getting a mortgage tomorrow, what can I do? And it's like, you have to put this all in plan at least a year before, 2 years before. So this is where working with an accountant really helps you to plan. We always try and drill down in terms of what our clients, what their personal goals as well, what they're trying to achieve. You have people like, I'm trying to move house in the next couple of years and things, and we put that into mind and like, okay, have you considered this? Are you thinking about that? Rather than just like, I'll just give you a solution at this point. It could be a very expensive one if it's not planned properly.
Yeah, that makes a lot of sense. I think. Pardon?
I was just going to say, just looking at the similarities though, in terms of if you're employing other people, the way the payroll process would work would be exactly the same. So whether you're a sole trader or a limited company, if you employ other people, need to pay their wages, you have to register for payroll, you have to make your monthly submissions. The record keeping around that would be the same for both. So coming back to the question we talked about earlier, what the reporting requirements, the differences. If you're employing people, your reporting requirements for that would be the same for both formats. So it doesn't really make too much difference what kind of setup you have. Just as a sole trader, there's no separation between you and the business, so you can't pay yourself a salary. You can pay other people, you can employ family members, but you can't pay yourself. Whereas as a limited company director, because the company is separate to you as a person, you can pay yourself because you're two different things.
That makes sense. Thank you. I mean, the main thing I'm getting from this is to be forward thinking and think about your life as well as your business and what you need now and what you might need in the future.
Hopefully putting you off from trying to DIY.
Yes. And speaking of being forward thinking, I've got one final question to end on, which is when you're looking ahead in the future for your plans, if your plan is to eventually sell the business, is sole trader versus limited company, which would be best in that scenario if you know that actually that's your ultimate goal?
It's a really good question. There's very few people who plan that far ahead, that they kind of, when they're setting up the structure with no arch, I'm setting this up ultimately to sell it. You get a few of those. I think when it comes to selling, again, it's one of these, it depends kind of answers, because it depends on, there's so many different elements to it. It depends on who you're selling to, what they're going to want to buy. I mean, ultimately, as a sole trader, you're just selling the trade and assets of the business you sell. Whereas if you're a limited company, you're selling the shares that you own, as a shareholder. There can be different tax treatments depending on how much you own, how long you've held certain assets or shares for. It gets very, very complicated. But what I would say is, thinking about that forward planning, if you know you're going to be selling, I would say definitely they need professional help, and it's something you want to talk about, not just days or weeks ahead, but probably years ahead. I'm thinking of if someone's thinking of retiring, like, okay, I'm thinking of retiring, I'm going to sell my business in a couple of years. Start thinking about it now. It can be packaged up in such a way to be the most tax effective for that situation, for those set of circumstances. And it's not necessarily that one's better than the other, or one's going to, it'll be, often you have to factor in the circumstances of the buyer. their own personal tax situation, what they might want, what other businesses they have, and it can get very complicated very quickly. So
yeah, and there are various circumstances of why people want to sell their business, you know, and also it comes back to the performance of the business, or what sort of money the business is generating for the next few years. But the core of it as well is always going to be in terms of when you get accountants to work into it or to value it or try and structure the deal, they're always going to be looking at the books and records. So again, a good bookkeeping practice would be, you know, to if you've got everything, and some people even have monthly management accounts and things like that. So it really adds on to that. So if a client came to me and said, you know, I've set up this business, next 5 years, I'm going to sell it. We would almost put like a bit more comprehensive package that they would need, because you're going to be subject to like more scrutiny, for example, or people just want to know more transparency or disclosure. Then you would, you know, your business would, the way you do it will be very different. You pay yourself almost like, or even things of paying yourself or how you run the business is all different, because you want to make sure that someone else looking to buy a business, that's going to be a viable business, and not just a little, like, you know, hobby package to a limited company sort of thing, where when you buy it, when I have to actually pay people and factor in all the costs in there, it is no longer profitable then.
What a lot of people don't always realize as well, when you, like, if you're buying a limited company, you know, because the company is a completely separate thing, you're taking over it as a new owner. You're buying the entire history, reputation of the company and everything that's gone before. You know? So if the previous owners or previous people running the business haven't done things right in the past, you want to make sure that's not going to come back to bite you as a new owner. And suddenly there's customers coming out of the woodwork with complaints about things that
you
didn't even realize existed. You know? And that's when it comes down to having really well structured contracts and having the right legal people involved and all of that stuff. But it's it takes a lot of planning. There's a lot of different elements to it. But like Wendy said, I think the key thing maybe isn't the structure. The key thing is maybe being able to demonstrate that you've got a really good business that's marketable. You can only do that with good numbers, and that doesn't matter your structure. You know, if you're keeping the good records, you've got the good figures to be able to present to potential buyers. That's more important than anything.
That makes sense. And I think that's just another reason. And of course, there are lots of reasons. That's just another reason to make sure that your accounting is correct and you have records and you can provide all of this. Because presumably, if you're ever selling your business, one of the first things someone will say is, can I see your accounts? And so just another reason to add to all the other reasons for having really good accounts. Well, thank you so much for all of this. You've shared such a lot, and I think you have really helped make a lot of this clearer. I think what I'm taking from it is that it is still very complex and the answer will be different for everybody listening. Probably the best thing is to seek advice. So I will put a link in the show notes for people if they want to book a discovery call with you to talk a bit more about their business, their circumstances. And before we wrap up, I would just like to know, is there one thing that you would really like people to take away from this episode? What would that be?
For me, it would be, don't rush into anything. Have a think about it and plan it before you do it. Because once you've made a mistake, it's a lot harder to fix than just getting it right the first time.
For me, would be the classic bookkeeping, because we see so many people jumping into things and not having proper records. It always seems very like almost very tiny little advice, or something like, don't forget the brolly or anything, or don't forget anything. But this is so neglected, and it's very important, and it doesn't take a lot for people to make sure they have it. I sometimes speak to, if I go to networking or anything, I speak to business owners, and I get that, like, oh, I'm not ready yet, I'll come to you and stuff. But I said it'd be worth just having a quick 10 minutes. I could tell you what basic things you need, even if you're using spreadsheet, or there are a lot of very economical solution software for sole traders, for example. and it's actually not that scary to use. And by having something like that, sorted, you can then focus on your, how to generate more sales for your business, or how to get better suppliers or anything like that. Yeah, you don't have to go, I'll wait till I get to that point. Like, just get there.
Yeah. That's great advice. Thank you. And yeah, personally, I just feel it's really nice just to know that side is taken care of. You can get on with other things if you know that all your accounts is in hand. So thank you both so much for your time and for everything you've shared.
No worries.
No problem. Thank you for having us.
Thank you.
Right, if you've been inspired to start a podcast in 2024, I really recommend my podcast host, Captivate. Captivate were my top pick when I started podcasting 4 years ago because of how easy it was for a complete novice like me to get started. I've stuck with them for the last 4 years because Captivate is still really simple to use. They keep adding great new features like the ability to share ads like these, and they've just been really reliable. So when you're ready to start your own podcast, you can use the link in the show notes and get a free 7-day trial with Captivate.